Happy Thursday, team. Actually got a really good, well, I want to say actually, like hopefully the other ones are good, but today's is a little more fun, a little less data driven than your typical weekly episodes, but we got some good stuff here. So let's hop into it. So first and foremost, team, really good news. Check this out, right? Look at the big green. Green is good. This is rates. These are mortgage-backed securities. The inflation report saying that, hey, inflation actually went down. By the way, called it, right? Like we talked about last week. Been saying this for a while, literally for about the last 6 months, been saying inflation would peak in the November report. Look what happened, came down. So we're on a good little run. Rates are getting better. That is awesome. Guys, as far as housing, this is just for those nerds that want to pay attention. Pause it if you want to, but look at this. This is the breakdown of the CPI. So everything down here, there's two slides. The next one's coming. But who knew eggs made up such a huge percentage of the inflation numbers? I had no idea. So look, food at work, you're like work and school, eggs, airlines, stuff like that, public transportation. Here's the second page, just the breakdown of the CPI and where it comes from. So I was like, holy smokes. But again, eggs blew me away. So the last piece, here's some deflationary pieces of the economy. So cool. Smartphones is the biggest thing that's gotten less expensive and, least amount of inflation. Here are layoffs that are being announced. Why is that important? First of all, sorry for anybody who's getting laid off. That's not a good thing. However, from an economic standpoint, layoffs typically mean future inflation goes down. Why? Because people will spend less when they don't have jobs. In addition to that, these high-paying salaries, whenever somebody was, hard up for employment, or when employers were looking for employment, they would pay people more money. Well, now this is kind of like the Great Reset where they can do that. So employments are starting to happen. You can see most of it appears to be tech or real estate based, but that will trickle through to the economy. So just keep that in mind because inflation can and will be coming down for that reason. Here's something. Household debt is soaring, according to this, the fastest it has in the last 15 years. And it makes sense. Inflation's made things more expensive. And if people are losing their jobs, they're going to increase the credit card debt. So that's one stat. Why do I share that with you guys? Yes, it's just interesting to know, to keep an eye out. But number two, here's the big one. This isn't official yet. You heard it here first, right? So Fannie and Freddie said come January 1, supposedly there's going to be a 1-point add-on to cash out refinances. So in other words, 1 point means like closing. So on a $400,000 loan, that means it's a $4,000 fee that shows up at closing. It doesn't exist today, but supposedly they're going to put that add-on to cash out refis. So if you know somebody that wants to look to do a cash out refi, yes, I know rates aren't great, but look, the reality is a 6%, 7% mortgage rate is probably better than the 18 to 22% they're paying on a credit card. So if they do it now, they can always refinance a year from now if and when rates come down. So just so you know, also that 1 point add-on typically translate in today's market to about a 0.5 point in rate. So it's a real, I don't know if they're just getting greedy and want to make more money when the refi boom comes next year, but there you go. Guys, this is just, I put it in there because we try not to be lopsided. In the Dallas Morning News, one of the Fed guys was basically saying that, house prices could drop 20%. I don't see it, but we're throwing it out there that there are some folks that are saying it. I think that's pretty extreme, maybe in some pockets, maybe. But I think Dallas-Fort Worth, for various reasons, we got some really good reasons to not believe that, but we'll see. Dude, you guys got to check this out. This is the fun thing. Check it out. There's a link. I don't know where it's going to show up when we send this to you, but there's a link. Lennar is building homes with machines, with 3D printers. It's wild stuff. Like nobody's sitting there hammering, using hammers and nails. People, they're building these homes with freaking machines. Unreal. Check it out. This is a great video. Secondly, if you've gone to Decad in the last week or so, they got hacked. Speaking as a guy who worked at a company when they got hacked, it's not fun. But I just thought, man, it was weird. We've been trying to look stuff up this week, and there you go. They've been hacked. They're probably going to have to pay a whole lot of money to get that back up online. Lastly, guys, this is pretty funny. So I just, to get in the holiday spirit, for those that played Mike Tyson Punch-Out growing up, or just for boxing fans, if you guys remember, Mike Tyson bit Holyfield's ear in a boxing match. That's pretty famous. If you don't know it, it means you're probably too young. You should look it up. But apparently, guys, Mike Tyson now has gummies that are shaped like ears, and this is the commercial for it. So we'll put a link in here too. Pretty funny. Acting's pretty stellar. So, guys, as always, we appreciate you so very much. Call us if you need us. We'll be around this weekend to help you guys get pre-qualified or do anything of that nature. But keep watching, and when you think mortgage, think Mark.